Thanks for tuning in to Talking Point. I'm your host, Niraj Shah. And equity markets seem poised for more gains, or at least start to the year 2021 has been pretty strong. Never mind one-off pullbacks in the US markets. But it is with this backdrop in mind that we have our guest on the show today to talk about how we might do as we are on the cusp of the earnings season, about a month away from the budget, and will that really matter? And other asset classes as well, because Ajay Srivastava, as I learned, has not just been parked in the quadrant of equities, but he is uh, he is parked in other quadrants too. So let's take the conversation to him to talk about how is he feeling about the current investing backdrop in the landscape. Ajay, good having you. Thanks for joining in. Hope all is safe. Yeah. So Ajay, what's your sense? We are at new highs. Do you reckon that this is justified and people should not be wary about the fact that we are at new highs, but maybe take it as the day comes?
See, I think it'll be unfair to ever invest and say we are not wary of what we are doing. I think that to be careful is part of the investment paradigm. So to say that, listen, it's all it's all gung ho is not the correct way to look at it. I think if people, even in this environment, are going to make losses. People in this environment are going to have subdued returns. It just depends where you are located. If you bought, an Abbott or a Sanofi, or you bought something by a Corp, you're not going to make the kind of returns. If you have shrugged away from the newer sectors of the economy and you saw the newer sectors, things like India Mart and Afflays of the world, then you're not going to have a right portfolio for market. So I think one is to be sanguine to say markets are going up, but it's equally important to be risk aware as to where you are. And things will happen. Things do happen, and we all know that we've seen so many declines. The key thing is to ensure the fact that you are riding the momentum. That's one. And number two is you do not ever shirk your basic investment thesis and your concept and ride the next horse, which is shown by the newspaper. I think that's where the trouble starts. When you go to C-grade stocks, you want to ride every story. You cannot ride every story. Pick your horses carefully and ride them steadily. That's, I think, the thesis. So to say we are totally no scared, no, we are fully aware of the huge risk in this market. Anything can happen anytime. But the fact is, if you're riding a steady horse, most likely help you to jump the ravine rather than getting stuck into the ravine.
Okay, so that's the evergreen advice. What about the near-term advice? Because we are on the cusp of two big events, the Q3 earnings, which a lot of people now have some expectations out of after the Q2 performance, and the budget, which FM has gone on various platforms and said that, hey, watch out for this. This will be something like the one we haven't seen. So the expectations are starting to inch up a bit.
That's TRP. Budget is expectation is all TRP. Now, do you remember the last year's budget? Do you remember the match of the budget? It all went all right. Nothing in the budget got implemented. Not a single number was correct at that time. Neither had proven hindsight. Okay, COVID has come in between, so that's a good excuse. So I think we should not ever look at the budget and say that's the direction. I think what has happened in the Indian economy has been more outside the budget. What RBI has done has driven this economy more than the government has done. All these issues on credit guarantees were never part of the budget, will never be part of the budget. So, so to take exception to the budget will give us direction. Budget is, I think, irrelevant document. Most of the numbers we can keep, for the 2 days that we get excited, go through the 100 documents and tables and chairs and whatever the numbers are. The fact is that the gross economy as a whole is not growing anything more than 5 to 6% at best. That's what last year will happen this year. The question is which sectors will grow, and that has nothing to do with the budget. Steel sector grew in this year only because of tariff barriers, and of course demand revival a little bit. Nothing to do with the budget. The automobiles is the same story. So so budget, Niraj, I would say leave it out of it. I think the key is what question you asked first is the momentum continuing? And I think the momentum is going to continue for two reasons. One, the wealth impact of what has transpired in 2021. And it's strange to say wealth impact because that's the truth. Hundreds and millions of Indians have made lots and tons of money in this market. Real estate has done well as well. Liquidity from real estate is coming through. That wealth impact is going to filter into the next year consumption, and we will see that happening. That's one large story. Second is government policy toward large corporates is clear, unequivocal, supportive. And what is PLI but a subsidy to the manufacturing sector at the end of the day, which is what we say, let's take away food subsidy, but on the other hand, we say PLI is a good idea, right? So support to the large sector is given. Wealth impact will come through. Number three, quite a bit of Indian people have sold, Indian investors sold equities. They are sitting on the sidelines. So they need to come and buy in this market as well as as the market unfolds. So nothing worries us at this point of time in terms of macro. What worries us sometimes is local-based events like the farmers' agitation, which causes a crisis in the north, Punjab, Delhi. Consumption has gone down. But we should be happy to note that this year we are starting off with a huge wealth impact tailwind behind us in terms of consumption.
Actually, so a couple of questions. On the subsidy bit, Ajay, I mean, I just wonder the difference between a productive subsidy and a non-productive subsidy. I mean, PLI, I thought actually was a pretty good idea.
You know, it's a thin divide. See, what is a non-productive subsidy? If you give the money to the farmers, for instance, to grow the crops and they become, and the rural income comes into the system and then it filters through tractors and fertilizers and consumption item, that's equally productive, but it has a much wider impact. If you see what has happened to the tax credit given to the corporates last year, that didn't have any impact because MNCs like Nestle, what they did was they just hiked the dividend rate. Nothing happened to the economy. You gave a huge tax benefit to the corporates. All they did was to increase the dividend to the shareholders, and most of the dividend like MNC went abroad. But when you give subsidies, and if you correctly target it, they come into the economic system. Even if you look at the velocity of money of 3 or 4, Niraj, you will see that the local consumption at the lowest level, which is a village aggregation into small town, goes up by 3 to 4 times, supports so much of infrastructure employment, is unbelievable. So let's not be semantic about that PLI is better. I'm not saying PLI is bad, but the fact is that the money these corporates make will mostly go to the shareholders. Very little filters down to the productive capacity. Yes, PLI in some cases will do that, but what will happen is like pharma. People who would have anyway invested will now go for a PLI unit, take the subsidy from the government if they ever get the money from the government, given the state of the fiscal, and then say, we have used that money correctly. But that's substitution of investment more than new investment.
Okay. So, let me just ask you as a follow-up then. So electronic PLI has been the poster boy, but some of the others are, the companies have said that they are still figuring out if it's a good idea to make use of the PLI scheme. The chemical companies, for example, autos are still awaiting their turn, etc. So do you reckon that a lot of companies will make a beeline for doing this, or companies will be circumspect because of the very nature of the PLI scheme, which is just 5 years?
See, I think first of all, for other industries, notification are awaited. So, one doesn't know the fine print of what transpires. 5 years is to say for a pharma industry, 5 years is too short a tenor because to set up a new plant, it's a 2-year period. And then to get certifications from the various accreditation authorities takes the next year and a half, 2 years. So, to expect that pharma to use up the subsidy in 5 years is impossible. It's somebody got the maths wrong. It takes minimum 4 to 5 years for a plant to get accreditation after it has been established. So sectorally, I think people will evaluate. And 5 year, of course, is it's a notional tenor. Somebody just bureaucrat wrote a 5-year plan, has got into the head, and that's a 5 year. But pharma industry 5 year makes no sense. But the key question is, what's the confidence that the government will pay up when the time comes, the PLI, and not have a fiscal deficit constraint or change the rules retrospectively or put new conditions? I think corporates, when we work with them, are very wary of incentive-based government policies driving their investment decisions. Some like Dixon are good because they produce, they sell within, it's an assembly plant. You can set up an assembly plant in 2 or 3, 4, 6 months and start the production and shut it down eventually if nothing works out. You sack the workers and your plant is shut, capital investment is minimal. But pharma sector is different, cars are different. So evaluation criteria is not necessarily PLI, but going to be that what's going to be a long-term plan and will the government ever pay up? Because if you see what's happening to the GST refunds, etc., it's difficult to get money from the government, right?
Yes, it is. At least traditionally, it's proven to be. Let's see if this time is different. Ajay, a couple of questions. Have you changed the nature of how you are going about investing your money as well? In the sense that I heard you mention at the start of this conversation, if people were parked, let's say in the India Mart intermeshes or Affles of the world, they've made money. So my question to you is, these are not. The valuation upticks have led to the price moves. It's not that the earnings have come in gross because it's happened in too short a time frame. So I think it requires a different mindset to kind of invest in these. So are you kind of changing the nature of how you are going about investing, wherein you might be moving out money from some businesses that you traditionally used to but are trying to take up some of these fancied businesses? Because 2021 would be a year of some of these fancied IPOs, right? We'll have the Policy Bazaars, Zomatos of the world coming out. So how do you navigate through that landscape?
Fantastic, Neeraj. I think that's a key. I think we need to embrace the new, and that's the important part for people like old people like us are embracing it. So youngsters you can embrace it. And I think you're right, absolutely. This year will be a paradigm shift for investors if you're not in the frontline stocks. And you mentioned profitability. If you look at the story, whether it's Amazon or story of anybody, profitability will come. The key is the moat. Once you have a moat as big as say India Mart has, or Nykaa has, or Byju's has, etc., etc., those are very difficult to replicate, and that's the value that these companies bring to the table. Number two is scarcity value in portfolio. All our economy stocks are what fills up our portfolio today in India. Unless you're in the US market selectively, either through mutual funds or directly through alarms, you really don't have a good technology exposure in US. And if you have, that's wonderful. If you don't have, you need to be in the frontline delivery of technology. The world is going to change. It's not going to be that your old investment thesis of standard manufacturing companies and all will remain. You need to give up that thesis. You got to embrace the new, keep money alive. You very rightly said there are about 20, 30 IPOs are going to come from front-end technology. And we're not even talking of things like back-end technology, semiconductors, etc. We're talking of people who are day in, day out selling to the retail market. I think is going to be the greatest IPO year in the history of this India. And if you don't have money to invest and you're still invested in old economy stocks, you're going to miss the opportunity of your lifetime. So my suggestion is keep your money. There is lots of firepower coming and good quality stuff coming to the market. If you are stuck with the old economy, get rid of it. That's not going to work in this economy. EVs are going to work, your intertrades are going to work. And, so I think that's why I said 2021, one of the most exciting years India will see today in terms of how much more new companies come to this market. Our market will change so beautifully. It's amazing. Absolutely.
Okay. Well, you know, I think people should look forward to this and embrace this change as it comes. But just wondering, Ajay, uh, I mean, Info Edge, for example, was the talking point of the markets yesterday, right? I mean, Zomato's numbers and the losses are swelled, but the top line has grown almost 100% YOY. So how do you approach some of these businesses? I'm just trying to understand from an Indian perspective, because the common um, point is that, Indian companies are not innovators, they are followers. And people are saying, why are you giving such valuations to Indian companies? So the common refrain that I always hear is that don't look at Root Mobile's valuations. They are so absurd compared to Twilio, right? Because Twilio is trading dirt cheap compared to Root, but still Root is getting by. So I'm trying to understand from you, how are you approaching some of these niche businesses in India, which are technology focused, front end, and doing niche work?
See, always we will have exuberance leading to excesses, maybe followed with a correction or perhaps re-rating. Two things can happen. One is you'll have a re-rating, and second, you have correction. But I think what's happened is that people have been caught unaware that it is not part of their most of the portfolios. Whether it is, look at the mutual fund. Indian mutual fund industry is a classic example of sleeping Gulliver. They're just sleeping on the job. They never had these stocks in the portfolio. Now they're waking up and catching up, and you can't get quantities because people are not selling. So there is no liquidity in these stocks for large-scale institutional buying. That's what is driving these prices today. The frenzy that you saw in Info Edge is, what is it? It's just a pure driven by the pure fact that people are waking up 2021 saying, hey guys, I have none of these stocks in my portfolio. Whether it's a PMS, whether it's a mutual fund, each fund manager is being put into the corner by the investor and saying, why I don't have this in my portfolio? Now the catch-up is going on in this portfolio. And as all catch-ups have, there will be a period of exuberance. There's no reason for things to go up by 15-17% in a day. But that's what has happened in the last 5 days with most of these stocks. And I think what's happening is pure catch-up. And the Indian fund managers have been caught short because they were too stuck to the old theories of investment. They never realized when the ship sailed. And now they're swimming faster and faster to board the ship. It's going to be difficult. We'll make mistakes in valuations. But eventually, all Indian portfolios will have to realign themselves to these stocks. Whether we like it or not, we don't like the valuation, whatever it is, you cannot live without the stocks in a portfolio. So PMS guys, mutual fund guys are waiting on the sidelines. If you sell, they're going to buy.
Yeah, well, it's I read a report October 2020 on Info Edge, which said the new or end October, the neutral on Info Edge, um, a price target 3,000, and that guy must be crying in his on his seat right now. Nevertheless, I mean, I'm not trying to bash anybody up. Everybody makes mistakes, and everybody has a valuation model to follow. Ajay, so just a couple of questions then. You mentioned new economy. What about the old economy? I mean, the reason I'm asking the question is that PSUs are making a bit of a comeback. I was looking at the returns of some of the uh, PSU thematic funds. They've done about 20% in the last 3 months, which is not bad. The whole market has done that, but for PSUs to match that performance, I thought is credible. And then there's this whole talk of the divestments, etc., happening, the government's approach to divestment changing. BPCL is front and center, but they also spoke about BEML, a strategic control being given to the new investor. So that's hardcore old economy. Do you think there is a place for that because of the changed approach of the government towards divesting these assets?
Okay, I am a great sufferer for. I'm sorry. The call. I'm a great sufferer of PSU because I kept the stocks, and it was the biggest value trap that I ever saw. And I think it's absolutely disaster. And I used to actually, Niraj, I'll tell you, I sometimes used to go to the bathroom and slap myself and says, "Where were your brains when you were putting your money?" All right. Actually, I was doing this to myself, really kidding myself, saying, "Listen, you guys are nuts." Everybody said PSU, don't do it. And I said, no, look at the value, look at the P, look at the book value, 0.5, 0.3. And it paid me hell. 3 years, the portfolio suffered for the PSU. Maybe this is a renaissance window. Maybe it is so. But as with all government things, I keep away. And I'm saying I have a portfolio of PSU but I'll be honest, that's legacy portfolio. If you're asking me if I'm buying today, maybe, for somebody I'll buy Hindustan Aeronautics here or there. But by and large, PSUs, I have folded my hand and said, I have seen too many let's say rainbows on the PSU, and they all disappear at the end of the day. And the key question is that you're right, till the strategic control does not change, and BEML could be a good example. These companies are worthless, really, because that's what they are. Look at what they've done to PSU banks. Can you believe it that these are banks at the end of the day? So, Niraj, so one can take credence with some companies like NMDC, the equivalent, or NALCO, or Zinc, in the Hindustan Zinc, because they are in basic commodity cycle has changed. So there could be the good worthwhile. But if you look at NTPC, a 20-year record of being a dog, it has never ever got up for a walk, forget a run. So, so I would be very careful getting into the value trap of PSUs. And as I said, give me a chance to put money in new stocks, new industries versus PSU. No. The second question, more important, you raised was old industries. Of course, old industries do very well in this country. There is no competition. There is no new manufacturer. There are small companies are dying by the hour. So a Bata will do well, a Relaxo will do well, a Maruti will do well, etc. So I think it's steel companies will do well. This is a phase of India where the top 500 will do so exceptionally well, it will become unbelievable. And the capital which has come in the last 12 months has strengthened the balance sheet, borrowing available at the cheapest cost thanks to RBI. I think it's just a perfect place for Indian large manufacturing companies to make the kind of money unheard of in their lives.
Okay. Ajay, one final question. Since you're talking so much about new economy, etc., what about the newest craze on the block across the world, crypto?
Well, if you don't have it, go and buy it. At the end of the day, stop the valuations, do what you like.
Why?
It is here to stay. Okay. First of all, I think it is here to stay. Now, legitimacy is now being acquired because all the top tech companies, all the banks have now started to accept it. Till now, there was skepticism. Buffett saying it's horrible, it's speculation. Munger saying I know what he said, something like saying that it's gambling or whatever it is. But I think now is getting acceptability from mainline banks, JP Morgan, Citicorp, and for the payment company like Visa, MasterCard, they are getting into saying that yes, it's a good idea. You saw Libra coming into place at this point of time. Broadly, it means that there's a legitimacy being coming to the fact that we can move away from traditional currency. That's one. Number two is as an investment asset class. Now people are saying it's not only payment, it's an investment class. And guess what happening? Less than 0.0001% of investors have anything in crypto at this point of time. Even if 0.1% or 1% want to get into it, supply is not unlimited at the end of the day, just like what we're seeing in stocks in India. And that's why you see the price appreciation. Now, we can argue whether it is worth 30,000 Bitcoin or 40,000, or is it a scam or 20,000. The fact is, today, tomorrow, day after, you'll have need to buy it as part of a portfolio. You can keep away from it for some time and watch the fun, but you will join this party. So before you get into the FOMO panic, I think start investing in it. You'll feel better within the portfolio than without.
Okay. And there's just last question. Since you seem to have studied it so well, a lot of people say that a truly decentralized crypto is only Bitcoin. The others are not truly decentralized. And therefore, even if it's looking expensive optically, try and stick to Bitcoin and not to the others. What are your thoughts here?
Same strategy. You need Indian strategy. Get to the large corp, get to HDFC Bank, you maybe not go wrong. But if you start to buy an Yes Bank or an RBL, I'm not saying RBL is a bad bank. Sorry, I'm just saying that you could end up in problems of two kinds. One is the liquidity trap, and which is typically happens to the small cap. And second is events which might overturn. So when you have such wide ownership of a Bitcoin, wide supervision, at least you are in a safer zone. Sure, price can crash, price can go up, but at least whatever happens to Bitcoin will be magnified 100 times in smaller of the Ethereum and the others. So the idea is to stay with the large cap, because experimenting with a new idea concept. Now we can't do two things: become experimenting with the idea and also experimenting with the weakest guy on the block. Now that will be a disaster. So I'm saying let's start experimenting with the strongest guy on the field rather than the weakest guy. So like in a beauty, if Nykaa comes tomorrow for an IPO, you go there rather than going to a third grade, small time, 100 crore turnover beauty retailer. That's a story of Bitcoin as well. Stick to the large cap, new ideas. They will drive it better for you and become safer.
Ajay Srivastava, it is a fantastic conversation today. Not that others aren't, but some very interesting thoughts. Thank you so much for giving them to us, and thanks for speaking to us today.
Thank you, Niraj. Have a great day.
You too. Bye-bye. And viewers, thanks for tuning into this edition of The Talking Point.